If you are curious in what is actually in SPY or QQQ or IWM, go to Google and type in SPY holdings. Let's take a look. So I typed in SPY holdings, scroll down, I click Market Watch. Here you can see what the price of SPY is right now. You can see their holdings, it's in technology, financials, healthcare, and you can see the top 10 holdings. So if you invest in SPY, 7% of your money gets automatically invested into Apple, 6% into Microsoft, Amazon, Tesla, and you could see all these companies. And the other 490 companies have significantly less exposure, so they weren't important enough to show up on here. So now let's look at QQQ. Come down here, trading at 275. Similarly, it has very similar holdings, but the difference is because there's only 100 holdings, Apple actually has a significantly higher allocation. Microsoft, 10%. So let's actually compare SPY versus QQQ. You can see SPY right here. Apple has 7%. Now let's look at QQQ. QQQ holdings, Apple has 13%. As in, Apple has almost double the allocation in QQQ as it does SPY. Now we're looking at SPY. You can see all these percentages are significantly less for SPY than it is for QQQ. Also, some of the holdings did change, but you could see that. This is why QQQ has higher volatility because there's a larger allocation to some of these huge companies. Lastly, let's look at IWM. Look at the difference here. The largest holding is 0.37%, right? Compare that to QQQ, where you have 13% in one company. With IWM, there's 2,000 companies, and the largest holding is 37 basis points. It is incredibly small, but once again, these are extremely small companies, and so there is higher risk with investing in each individual company. But overall, ideally, it does well in the long run. Now, do you see why I invest in QQQ mostly? Because these are companies which I wouldn't mind holding, right? These are large companies. I feel good. There is a lot more volatility, but as you'll find out later in this course, volatility is good for option sellers. And so that's the reason I primarily invest in QQQ. The only reason I bring up SPY is it is a little bit safer, as in less volatility, which means less profit, but it is a safer alternative to QQQ. Other investors also like IWM because they like that diversification across 2,000 companies. It is more volatile than QQQ, so you'd actually make more money with premiums with IWM, but you are taking more risk. So personally, I found QQQ to be the sweet spot for me, again, personally.